Mark, you are on mute.
Hello, sorry about that. Hello and welcome to our webinar entitled Navigating a Complex World, Best Data Practices in Sanctions Screening. My name is Mark McCord. I'm the editor of Data Management Insight here at A-Team Group, and I'll be moderating this webinar. But before we get started, I'd like to share some events with you that we have coming up in the next couple of weeks. Use the QR code on your screen to see more details. On November the 20th, we have our next webinar, which is Gen AI and large language model case studies for surveillance, screening, and scanning. Following that, on the 20th of November, we have our RegTech Summit New York City, and that's in Midtown East. And on 26th of March next year, looking ahead, we have our Data Management Summit London, and that's in the city. For today's webinar, we have a great panel of speakers. We have Oliver Bodmer from SIX, Gail Maquignon from Swiss Re, and Harsh Shah from Deloitte. I'll ask them all to introduce themselves fully in a moment, but first let me introduce you all to Slido, the audience participation app we'll be using today. We will be running 2 polls during the webinar, and we'll be using Slido for this and also for audience questions. To take part in the polls and ask questions of our speakers, scan the QR code there on your screen, or go to slido.com, as you can see on there, and enter the code DMI webinars. We will also place the link to Slido in the chat box for you now. You can find the chat icon on the top right-hand corner of your screen. If you get stuck with Slido, don't worry. Type your questions into the questions box, also found in the top right corner, and our team will move them over to Slido for you. So let's go to our speakers. And Oliver, please introduce yourself and tell us a little bit about your interest in this subject.
Yes, hi, my name is Oliver Bodmer. I'm working with SIX. I'm connecting here from Switzerland. At SIX, we are the Swiss Infrastructure Exchange. We are effectively a stock exchange, and we do have a financial information business as well. And our particular interest is sanctions since 2014. Since that day, they effectively affect the financial markets. So what we are doing, we are looking at sanction regulation and linking that to the financial markets, into traded securities. That is what I'm doing. So happy to be here. I'm working as a product manager at SIX and happy to give my perspective here in this webinar.
Thank you, Oliver, and welcome. Gail, please introduce yourself.
Thank you, Mark. My name is Gail Maquignon, and I am the sanctions framework owner for Swiss Re. I have been working for just about 12 years in the insurance industry with brokers, insurers, and reinsurers. And my experience in sanctions is shy of 12 years. So I've been here since the 2014 events. Looking forward to providing my insights from the insurance industry.
Thank you very much, Gail, and welcome. And Harsh, over to you.
Mark, thank you so much for hosting this event. My name is Harsh Shah. I'm a managing director with Deloitte in the US. I primarily cover financial crimes, technology, and analytics. Sanction is a big focus area for me and for our clients in the US, covering banks, non-banks, and other fintechs.
Thank you very much, Harsh. Okay, now we've got to know each other. Let's press on, and we'll start with a poll question. The question will come up, and the various answers and the multiple choice answers you can choose from are on the screen now. That question is, what is your organization's top priority for improving sanctions screening over the next 12 months? We'll ask our panel to discuss the results when they come in, but first off, let's start off with a panel question. So, starting with you, Gail, what are the chief drivers behind sanctions issuance over the past decade, and what and who do they cover?
Good question. Thank you, Mark. I would say the chief drivers definitely geopolitical tensions. So in 2014, we had Russia's annexation of Crimea. We had Iran and the JCPOA, so nuclear proliferation concerns. similar ones for North Korea, actually, and obviously the 2022 invasion of Ukraine by Russia. More recently, we've seen an evolution of sanctions topics towards more human rights violations, cyber attacks, corruption. So the scope of coverage of sanctions has really widened. It's not just states anymore, it's not just individuals, it's entities, vessels, sectors, sometimes also very specific technologies or commodities, thinking of the energy with the oil price cap or semiconductors. And obviously, when we talk about thematic regimes, wherever it's the human rights one, with the Magnitsky Act or the EU's human rights sanctions regime, these regimes have now really expanded to ensure that they reach all actors globally. So sanctions have evolved from, say, state-based tools of foreign policy to more complex global mechanisms or structures of sorts designed to influence behavior and across multiple jurisdictions.
Okay, thank you. And Harsh, how do you see the environment today?
I think Gail's covered all of the major ones. What I'll add is also with the advent of cryptocurrencies and entities focusing on further usage of cryptocurrencies, there is now a heightened focus on making sure that those transactions and those customers don't run afoul of sanctions. And it's not just sanctions in one country. If you're a multinational organizations, you also now have obligations across multiple jurisdictions as well.
Yeah, yeah, Oliver, the reach is huge, isn't it?
Yeah, I think we have even prepared the slide here. I think both speakers said that it's extremely complex, right? I mean, there is a new sanction programs that are being issued, and just to get an overview here on that, I mean, there is so much programs by different regulators coming out, and I mean, this needs to be normalized at some point. And there is new programs coming all over. But I think one particular 2 points that we are seeing currently is there is, especially also out of the US, right? So we have it mentioned here on our slide. We had, there is OFAC, right? The Office of Foreign Asset Control, which is mainly looking after the dollar, right? And blocking sanctions, also the financial markets. So we see it converging with trade restrictions, right? There is soon there will be probably something coming about outbound investments in the US into semiconductors, quantum computing, etc. So there is a convergence, and I think what we see, what our clients are doing is they're moving away from a strictly sanction approach, black-white approach, into a risk-based approach, where they look into also trade restrictions that could potentially become financial sanctions. Something else that we also see, we're probably going to touch on that later, is all the investment stuff around indirect investment into ETFs, etc. So the challenge is mainly to keep up with all these changes in order to be compliant. And this is where we intend to help our clients, of course, navigating through there.
Yeah, thank you all. Can we look at the poll results now? And it looks like, so we asked what is the organization's top priority for improving sanctions screening, and the overwhelming leader is strengthening oversight of third parties and correspondence. Oliver, is that something you see in your work?
I mean, of course, I mean, what we see, right? The third parties, right? I mean, what we have launched, or what the regulator guidance has shown, since we have seen China sanctions, for instance, the financial markets were mentioned there when Trump had his first term, that fund manager, ETF providers, they also need to look into what they're investing into their ETFs, right? And so this is a big issue, right? For instance, when you are a retail client or a retail bank, that is selling major investment vehicles that are based on indexes, right? So you need to make sure somehow that when you're selling this to your clients, that you don't have tainted securities, or that you don't have these Russian or Chinese instruments in there that you effectively would have to block. We have seen it in the past, right? So there have been also lawsuits against banks, that were invested in such securities, but especially that, that indirect exposure into a third party. This is something that is certainly something that clients need to be aware of in the future.
Okay, excellent. Thank you, Oliver. Gail, if we can start with you on our next question. What changes have you seen in the way sanctions have been imposed and the way that they are communicated over the past decade?
Sure, thank you, Mark. I think traditionally, or before, even with the time of the internet, we really would get updates through bulletins. We would have, to deal with potentially printed or scanned, updates and lists of sanctions lists, and then updated manually. Everything was very much manual. Thankfully, with the evolution of technology, we have seen regulators becoming a bit more technology aware and fluid, and there is now more a move forward and across the globe, I would say, towards instantaneous, digital and coordinated as well sanctions updates. So if we take for example, the big names such as the OFAC, the EU, or if we think here, as I'm based in London, the from the UK, it's pretty much what we're seeing is almost near real-time updates, structured XML data, automated list integration, and going back onto the topic of coordination, we are seeing sanctions being increasingly imposed multilaterally, so with close alignment between key sanctions jurisdictions, obviously with room for divergence, which adds to the increasing compliance complexity that we see. But in general, I would say that communication has become a lot more transparent, a lot more FAQs issued by most regulators, licensing guidance, etc. Even sometimes the data feeds, but all of that actually adds to the volume of communications and change that compliance officers need to be aware of.
Right, okay. Harsh, they seem to come thick and fast these days, sanctions, and is that something that organizations are able to cope with?
That has certainly been a top of the mind issue. The frequency has increased and the volume has also increased with more and more of these bulletins coming out. Well, as Gail mentioned, a lot of it has been structured. You still see the bulletins published by OFAC that has individual names. There isn't necessarily standard structure, but what's great is there have been vendors in the space who take on that first heavy burden of taking that information, structuring it, so that organizations can consume it for their sanction screening program in more consistent manner that other parties in the same ecosystem are using it. So while the volumes increase, there are also advancements in how the screening systems work, how the list scanners work, and also with some AI-based capabilities being built out, we see organizations advance their capabilities for sanction screening.
Right, so technology to the rescue again.
Yeah.
Okay, Harsh, sorry, Gail, sorry. How can financial institutions be exposed to sanctioned parties, and how has that changed in the past decade as well?
I think it's really more of a direct versus indirect kind of exposure. So we used to have more concerns with our direct relationships. You can think of clients, counterparties, suppliers. So still from third parties, but also now increasingly via ownership or control links, and in terms also of complex payment chains. So it's more of a layered risk that we're seeing nowadays. those simple name matching that we used to be handling in the past. So now what we have to do is go through corporate structures, funds, sometimes full transaction chain to ensure that there's no specific entity or person that is in fact sanctioned hiding in it. So it's really become this know your customer's customer. And I think the regulatory expectation is there, and in financial institutions in general have had to adapt to the particular expectations.
Right, yeah. Oliver, it does seem like that some of these things could be sort of hidden from plain sight. Is that an issue?
I mean, this is where I would agree with my what Guy said before. You know, what is pretty mainstream is that everybody can source these sanctions list automatically, right? And you know, the regulators also made progress here. I mean, what we have seen in the recent designations by OFAC and the EU, you know, against a couple of oil companies in Russia. So there, the subsidiaries were already listed, right? But again, there was like a note. There is a 50% rule applicable, and the list of subsidiaries what is not correct, right? And I think we also have again here a slide, you know. So what is important there, that you can resolve that 50% rule, that you can really see what are the sisters of these companies. And the important point, but also was mentioned, that real-time aspect. So when something gets designated and you read then that there is a 50% rule applicable, ownership or control, you cannot start sourcing that data from scratch, because the next day you should already be compliant. And this is like the data vendors like we come in, right? And we have here a couple of data points mentioned. So we have databases of over 500 million companies and entities with the beneficial owners. So these ownership links are already there. So if something gets listed, then you mainly have this in the database. So this is for KYC and AML, then you're done. But if you want to go then a level deeper, because there is, you know, the ownership link. So this could be if somebody owns an investment into a company to more than 50%. Then if it's an asset freeze regulation, then these shares need to be blocked. And you then need to make that link to the financial markets, right? So you need to know what shares are out there, what debt products are out there. Are there option structured products, ETF, that have investments into such products? And that's where the data kicks in, right? And there, the approach to source that data, once the sanctions kick in, you're probably too late. So you need to really have that data before the sanctions are kicking, that you can connect these dots. And that's then where data vendors like us kick in to help our clients.
Okay, yeah, Harsh, I mean, do you have any thoughts on the role data can play in arming compliance teams?
Yeah, Mark, I think the theme here is also that the exposure is multi-dimensional, right? It's not just direct client relationships. You're also looking at the payment chain, indirect client relationship, correspondent banking, embedded finance, supply chain, beneficial owners that Gail and team talked about as well. So it is increasingly complex, and today's compliance program must look through these layers of ownership. Whether it's transaction, trade activity, or other indirect risks, right? Also, regional regulations may also mean differing guidances in terms of definition of ownership, control, and sectoral sanctions as well. So those are a lot of considerations that today's compliance officers have to keep in mind. And also make sure that their internal legal teams are aligned in terms of how the programs are defined, how they're executed, and how those sanction hits get reported jurisdiction-wise.
Okay, excellent, thank you. Harsh, staying with you, what are the penalties for and other costs associated with breaching sanctions?
Yeah, so we certainly see public enforcement actions. Large ones have ranged into billions of dollars, and breaches can not only trigger costs and fines, but also loss of licenses. You might have received specific OFAC licenses, and there's no way. Correspondent banking relationships could also be strained because of that. We've seen situations where U.S. branches of banks were unable to clear activity for their partners in other regions. Why? Because they didn't have strong enough control, and that's loss of revenue also for the U.S. branch. And not only that revenue, but also impacts on customer relationships. It could create for those who are just doing good old business for corporate banking or customers. For non-banks, it can also create issues with banking partner scrutiny. So if you're, let's say, a telecom company and you're operating out of region where there may be higher risk exposure, but if you don't have controls in place, then your banking partner will be less likely to continue business with you, or may place additional burden and responsibilities on you. So certainly see well beyond basic penalty and fines as an impact.
Okay. And Gail, what do you advise your clients on the potential penalties?
No, I agree with Harsh. The fine itself is one thing. So you have civil and criminal penalties. We have seen now individuals, that face imprisonment or disqualification. But in reality, the cost of the fine goes beyond the financial penalty imposed against a company, for example. You have a reputational cost. You have also the remediation cost, and that generally goes way beyond. You have to do system upgrades. You have to have external audits. You have to have independent monitors, and that all that cost really is better put towards a properly managed compliance structure and governance in-house. So generally, that's the message: is that it costs a lot more to do a sanctions breach and remediate the breach than actually put in place a proper compliance program with control frameworks, governance, accountability, and simply adherence to the sanctions frameworks.
Right. So staying with you, Gail, I mean, what are the measures that institutions can take to ensure they are compliant and avoid these fines? I know we've discussed data, but there are it's a broad spectrum of measures.
Sure. I think I would start with the governance. Actually, I'll stay on this topic, which is having a clear policy by the company, drafting a clear policy which is endorsed at board level, ideally, which is supported by risk assessments, which is also supported by tailored controls. You have generally, it is recommended at least that screening systems be regularly calibrated, that the ownership data is verified by compliance officers, that there is a clear escalation process in place, that it is defined and tested, and that generally means a lot of training. Not only for compliance, but also for the business teams, frontline teams. And then for compliance, there is also the idea that it is quite key to do some scenario testing, as well as post-event reviews. So lesson learned from the Russia invasion of Ukraine, just to ensure that we continue to see improvements, whether it's within compliance, but also with the business. So the idea is to not only keep communication internally correct, but also communication externally, especially with regulators and peers, sometimes within your industry peers, to remain strong so that you can remain as a company aligned with what the regulatory expectations are.
Thank you, Gail. Harsh, any thoughts on other measures that can be taken?
So in US, OFAC has published guidance in terms of what are critical elements for a sanction program. Those are very good points to look through. Includes the topics that Gail mentioned: governance, employee training, record keeping, audit, ongoing risk assessment. Those are very important elements that have been learned over the years and built out as industry guidance. So even if you're not a US institution, that's a good starting point to think about. Second is for global institutions, also making sure that your policies align across the region, so you have global standards that guides implementation of programs in region while giving regions autonomy to be able to meet the local requirements and obligations, including data privacy laws that may exist. And then third is making sure that your systems are a major component of your program and actively attended to. So making sure that you're feeding in the right set of information, you're doing adequate curating of data upstream, testing and tuning your calibrating your sanctions screening algorithms. And then on the downstream side, making sure that your teams are not only trained well enough, but also creating robust documentation to make sure that your organization's reputational and regulatory risks are managed.
Great stuff. Oliver, do you see any other measures that can be taken?
I mean, I would agree with what everything was said, because what we see, so I mean, we obviously a data vendor, but we have clients, and what we see, what over the last years, or when we started with mainly being active in this space 10 years ago, that there were well-established processes and tools for everything that is KYC, AML related. So, you know, testing your client base, but what we were saying before in 2014, suddenly these financial markets came into place. And when you suddenly need to block securities, then it's a technical different challenge, because these are trading systems. These are different systems. These are not the systems where you're hosting your client base and the accounts. So this was a technical challenge. And again, you know, there is guidance from OFAC out there, how you know, in the compliance commitments, how to set up compliance programs with management commitment, you know, escalation processes, and then of course also the risk-based approach, right? I think this is clear. So which regulators do I follow? Do I have what type of client base do I have? Do I need to implement UK based sanctions, even though that I don't have any ties into the UK? So these are questions, right? And then also sometimes the regulation, this is what I said before, the convergence of trade-related sanctions with financial sanctions. So you probably want to incorporate trade restrictions into your risk-based approach when it comes also to investments. That is stuff that we see with our clients, and I think, but overall, I think the market is now way more mature than it was a couple of years ago. Excellent,
thank you very much. Right, well, let's go to another audience poll, our second one of the webinar, and this one we're asking: where does your organization face the greatest challenge in sanctions compliance? Again, the multiple choice answers are on your screen, and you can answer via Slido using the QR code. We'll discuss that once your responses have come in. But let's next go to Harsh and discuss some of the challenges that organizations are facing as they try to automate sanctions screening processes.
Yeah, so there are a few different areas that have come through in recent times as where there are challenges for automation. And then if we take in terms of the evaluation of sanctions screening, it really starts with strong inputs, data quality and feedback into the upstream systems where the data is coming through. It is the bedrock of the automation. Regularly cleansing your data inputs, standardizing the customer transaction records, making sure you work with your technology team to ensure what's expected for downstream streaming application is conveyed and has the right set of lineage and traceability is paramount. The second set of concerns stems at the point of screening, so not having the right set of tuned, calibrated algorithms and matching parameters built into the system, not taking advantage of custom rules that you can deploy to minimize the sanction hits and to counteract the false positives that result. That tends to be another area that prevents some of the automation in the sanction screening process, because both of those collectively result in a volume of false positive, and then organizations tend to focus a lot of spend and money on closing those because those are obligations. So not a lot can be done at that point back to upstream as well. There are partner IT and technology vendors who can help. So it's not all the dire picture, just it requires organizational firm and commitment.
Good stuff, right. Oliver, do you see challenges as well?
So there, I would certainly agree with Harsh before, so the false positives are great issues, especially when you need to link various sources together. So we as a data vendor, we have also this problem. We don't invent that data, right? So we are sourcing, we're aggregating the data from 1,200 sources worldwide. There is sometimes different spelling, or between UK and the US, the spelling is different, etc. Then you have a Chinese that you need to translate. So these are all the challenges. So there is algorithms that have been around for a while, right? So like the Liebenstein algorithm, but there now you can use AI probably to leverage that. But again, once you have that right, you need to have, I think, automated processes that bring these data points together, right? And also that whole process that you need that cascade in the screening. What I said before, and I think we have another slide here prepared, that once you have the entities that are in scope that might be linked to a sanctioned person, and then you have that entity, and you then see that there is that entity is sanctioned, and you see that this entity is issuing shares after the sanctions effective date, then you need to have these automated processes in place that start working. And for instance, here we have illustrated an example that we are processing automated. So imagine there is a sanction stock which is part of in a fund C, right? And that fund C is invested in a fund B, and the fund B is invested in a fund A again, right? So the guidance that you hear from the regulator is that effectively, if this is a sanctioned security with some exposure into a Chinese CMIC company, then a US person cannot invest into that. So imagine this cascade here. If there is a 10% holding in Fund C and this shows up then in Fund B, if you only search Fund A and you see that there is a Fund B in there and you don't go deeper, you will never see the exposure that effectively the Fund A holds 1.2% of that security. And therefore, it can also be problematic if you're invested into Fund A. So this is as simple as this sounds here. If you want to do that look through on a global scale, mainly looking the whole funds universe that is out there, it takes quite some computing power. This is something that, again, vendors, you can do this on your own, or vendors can help you. And then again, the question now here that then the risk-based approach needs to take of that company. What is the risk? Will it be my bank, right, that is somehow selling that ETF to retail investors, or will the regulator go first after the funds manager that effectively is invested into that security? Their guidance or lawsuits or settlement agreements are still outstanding. But I mean, what could happen is that suddenly that Fund A gets listed by a regulator, and then all the assets would have to be blocked. And this is something why I, as a bank, I would like to be interested in knowing, do I have an exposure, or do these products that we offer to retail client have any exposure into sanctioned securities, or even if it's over multiple levels?
Right, yeah. And we can now, let's go to the discussion of the last poll. Let's see what the results were. and we asked, where does your organization face the greatest challenge in sanctions compliance and managing data quality? Sorry, went off my screen for a minute now. Managing data quality and entity resolution. Oliver, you mentioned the importance of data early on. I guess then this is not a surprise to you, these results.
Yeah, I think you see it. We have 45%, but I mean the second best is I would say almost equally important, right? It's with false positives goes with data quality, and like I mentioned before, right? The regulator, they're making progress in some point. We have seen it with these latest regulations against these oil companies where they give you a couple of subsidies, but where it's still, for instance, very complex is the sectoral sanction when there's only a regulation out there that talks about mining sector or AI sector, etc., where it's still not really clear. At some point, you need to then have an approach to source that data and to handle it because it's not given by the regulator, and this is effectively tricky to find these entities that are effectively in scope of these regulations.
Okay. Gail, Mark, do you find, sorry.
Mark, if I may add, right, so some of this data maybe you can buy and source, like the beneficial ownership or fund information, but not all of that is available without an automated structure manner that you could feed it to your system and have system operate a little bit more in an automated way. The other issue here that is also important to recognize is in correspondent banking value chain, you have your reliance on your partner to send you the right set of information. So if you're not receiving information through wire, that limits your ability to effectively execute the sanctions screening. That goes sometimes into the bucket of data quality because you didn't get the right information. There was wire stripping that happened upstream, and now your hands are tied as well. Resolution piece that was in our poll was also an important one. You may have multiple businesses and the same customers being onboarded at different places with different information. And if you don't have the single customer view or entity resolution taking place earlier than your sanction screening platform, then you're screening and rescreening the same customer multiple times and then advancing out the false positive hits that are being generated, adding burden as well. So those are great insights from the participants, but wanted to add some additional color there as well.
Thank you, Harsh. Yeah, and Gail, I did invite you to comment, so I should continue inviting you to comment. Is data quality an issue that you found?
Yes, as much as the results are for garbage in, garbage out. So it's absolutely true what Oliver and Harsh said. You have to have good quality to start. It's not just about quality within your screening system. Obviously, that's very important. You need to have a good vendor solution, but you also need to have receive information that you can screen, and that is going to give you the most pertinent results. Also, Harsh's comment about multiple sources of one single name have really resonated with me, as this is a recurring problem, at least that financial institutions are facing.
Right. Before we discuss some solutions, I'd like to look at one or two of the questions from we've been sent in from our individual audience members, and I thought we'd start with the one that's one I come across when I speak to people in the industry. And since sanctions compliance is a cost center, how do we precisely quantify the ROI of the data technology stack? Gail, is that something you've thought about?
I mean, for me, it's fairly straightforward. I don't want my company to pay $9 billion because that's the highest penalty that was imposed by OFAC, granted aggregated, so it wasn't just OFAC, but that's how much BNP Paribas paid the US. Not to mention, as said, the remediation costs. So when someone tells me, oh, compliance costs a lot or sanctions cost a lot, and it is not needed to go through the AI automation process, I say, well, do you really want to take that stance and take that chance, knowing you could face up to this amount at the very least, plus additional costs if we were to get things wrong? So yeah.
Gotcha. Harsh, any thoughts on that? On quantifying ROI on any investment in this realm?
Yeah. I agree with Gail. The cost of non-compliance is high, and that should be a factor into the ROI calculation for any sort of advancement. But there are also technology updates that could result in direct savings post-implementation, and that may be as simple as better algorithm to detect better matches, and that could reduce your false positive rate, and there is operational cost savings that come over period on primarily driven based on data and technology stack update. There are also ROI lens factors that you should include in terms of what additional business growth you're able to support. So if your technology and data stack enables faster, more agile onboarding of additional ventures, lines of businesses, and products and services, that's a true value add that enables the business growth. And a portion of that should also be considered in the ROI.
Yeah, good point. We've got a couple more, but I want to ask the next our next panel question first. And we'll start with you, Harsh. We'll stay with you, sorry. What role can AI play in automation of sanctions screening?
It's really at point solution in many different areas as we see it today. AI has evolved from your traditional model building, supervised and unsupervised learning, into more LLM and generative AI. And now what we're seeing is a lot more fluidity with agentic models, which now enables your models and tools to interact and to make decisions. So if you start from the upstream data sourcing side, NPV resolution is a good prime case, and there are vendors that offer solutions in that space with AI models for better NPV resolution, better curation of data that goes into the pipeline. We also see models sometimes in-house built, sometimes vendor built, and consultant company supported built in risk scoring the sanction hits that you receive. So let's say your screening platform produces a volume of hit, but because of limitations and capability, all you're seeing is high degree of false positive matches. To be able to confirm that and risk score them based on region, other data factors and attributes like age, date of birth, and for individuals, a location of incorporation, the models can take in and improve and prioritize which hits are the most likely to be more risky for the organization and should be investigated first. And on the tail end, we see possibilities and clients doing proof of concepts and using AI and automation solution for a recommendation of the hit disposition, for writing the narratives of those case works that are done, and also to make referrals within the organization so that they're in other compliance systems, whether it's in fraud or email transaction monitoring, benefit from the work that's being done in sanctions screening. That's purely on the sanctions screening spectrum. The same teams oftentimes also take on the PEP screening, adverse media hits screening work as well, and the same set of benefit tools and technologies deployed could also help reduce the burden on those additional adjacent capabilities within the organization as well.
Right. Gail, and is Swiss Re using AI in its sanction screening?
I won't speak on behalf of Swiss Re for this question, but what I can say is that I obviously noted when I heard proof of concept by Shad, it is definitely something that, let's say, not just Swiss Re, but companies across the insurance industry are embracing, because there is obviously quite a big interest if used responsibly, with a clear, auditability, bias management, etc. That AI tools, whether built in-house or provided by vendors, that they can help with the administration of sanctions monitoring, and instead allow compliance officers to just simply focus on investigating, rather than just basically ticking boxes through a screening tool. So there is a gain of time that we can see, gain of resources, and I think we just hope that there can be more solutions even to support the industry in that wave.
Right, yeah. Thank you. I mean, sticking with the AI theme, I'd like to go to another audience question here and see what the panel thinks about this. Given the regulatory requirement for auditability in the black box problem, what is the current best practice framework for explainable AI in sanctions screening? This is something we come across quite a lot. Oliver, do you have any thoughts on that?
Yes, I think probably AI will not be the answer to that. AI will not give you the answer to that, right? To respond to that. I think what the organizations really need to think about is that they need to start with again, also what is written in the OFAC compliance commitment, right? With a clear risk-based policy approach before they try to automate anything with AI, right? So I think once you have this risk-based approach defined, then you could define thresholds. How high are the ownership thresholds that you need to accept them? Do you want to introduce something instead of a 50%, you're a lower threshold? And once you have done that, you need to also define the escalation paths in-house, right? And you need to have that management buy-in. And once you have done that, then AI, I think, can be a great tool of you to do scenario analysis, based on different thresholds, etc. And this is where it really can be of a great help to you. But again, right, I think the decisions need to be taken and the risk needs to be assessed by human beings, and then AI will help you in order to do the heavy data lifting that otherwise you would have to do differently.
Okay. Yeah, and Harsh, do you? Yeah, sorry, go on, Harsh, please.
Yes, it depends on the explainability and how much it matters. Depends on what use case you're applying the AI to. So let's say if you're using a supervised learning model for the risk scoring that I mentioned earlier, there are explainable models that will help you identify what were the contributing factors or data features that resulted in the scoring reasons, and that could then help drive the decision and auditability, especially if you have human in the loop. If you're using it for narrative generation, then your human in the loop can go through and review, and that could add on in terms of cost saving. If you're using it for disposition recommendation, then there are more in the terms of AML space, but also in sanction space, there are sharp methods to be able to identify what are the basis on which that recommendation has been made, and using that to justify it. But I want the audience to recognize that AI enablement isn't a set it and forget it situation. Once you deploy these models, there is expectation that you train and retrain them to make sure that they evolve with the changes in the data, changes in the product flow that come through these models. We've seen situations where even during the initial journey in some of these AI automation, clients learn that the bias in the system gets built into the AI model because the high volume, there is significantly high volume of false positive. If you target this problem based on your data sample set that is highly biased towards the false positive, even when there are synthetic data examples with the real sanction hit, the system's going to think that this is false positive. So you need to manage the training data set to be able to evolve your model effectively. And over time, you need to make sure that the models are retrained based on the feedback and the types of examples you want them to be trained on as well.
Right. Yeah, thanks. Another questioner asks about natural language processing and when it comes to unstructured data. I mean, again, unstructured data is something that we come across quite a lot in our work, speaking to people in the industry. Do you see that, Gail? Do you see that natural language processing being used in sanction screening in this way when it comes to unstructured data?
I mean, yes, because it can create links between the unstructured data and try and identify potentially key terms that a human might have missed. There are some terms sometimes that are used, or some expressions that are used to avoid spelling out the name of a sanctioned country, and I think that's where the AI model can really be of use. Just on Harsh's point about the feedback, I would highly recommend establishing a feedback loop between compliance analysis and then automation team, that in order to improve the AI module accuracy every single time. For natural language processing, I would think that it can add value, but it really depends also on the level of, or the quantity of the data and the quality of the data that you have to go through. So it quite a lot of testing would need to be done, I think.
Okay, thank you, Gail. Right, well, we've got time for a couple more questions. I'll start with you, Oliver, on our next question. Beyond technology, what best practices can compliance leaders implement to ensure their monitoring systems are up to date?
Yeah, I think the monitor system needs to be up to date. I think they need traceability, right? Again, like I said before, the AI model will probably not take these decisions before you. So, but you need to build a system where you can implement the rule sets that are somehow understandable, or that everybody, also senior management in the company, has understood, that are somehow justified, and where you have an audit trail, right? So you don't want to have a black box somewhere where in the end of the day you cannot audit, or you can't see who took that decision, right? So what you need to have in a compliance system is that you need to log somehow these matches that you have. Is it a fuzzy name match? Is it a name match with a date of birth or whatever? You also need to be able to log the overrides, right? For instance, you might also have a decision, or a breach within your company, right? That something gets overridden. So this needs to be logged, right? And then where OFAC also emphasizes, you need to have these escalation paths defined, right? So it is not only technology, it is the whole rule set and training, and also how this embedded is in the organization, that everybody has an acceptance with the processes, and effectively the system is then only the tool that helps you, right? And then probably the most important point is, again, the best system isn't worth anything if you can match the data, and if you can load the data in there, that you can come up with timely decisions.
Brilliant. Gail, I mean, what sort of analog best practices would you recommend?
Well, I think we've touched upon it before, but regular or periodic control testing, also benchmarking of screening tools, a good oversight at board level of the sanctions screening process, overall process, as well as a very good collaboration between the various teams, whether stakeholders and teams involved, basically to ensure that there is shared accountability when it comes to different tasks. But I think that would be the main thing. One suggestion, or at least I can speak from a Swiss Re's perspective here, is assign a compliance champion in certain business units, or in all of them, to ensure that the local practices also align with group standards. That tends to help smooth the day-to-day adherence with the group standards.
Right, I saw you nodding there, Harsh. The best practices you think, outside of technology, what would you say?
Yeah, I think the team's covered, and want to add a couple more, but I love the point Gail raised, the clarity in the standards, policies, and roles and responsibilities are important, especially if you have federated sanction screening across the organization. Scheduling periodic reviews of your data streams, your technology, and making sure compliance or sanctions team are involved in that process. Logging significant list updates and process changes in a shared and accessible compliance knowledge base also can help with that overall of the output. And then, as I talked about, using periodic retraining of the models and calibration of your sanction screening system, led by the compliance team, is an important factor as well.
Right, thank you. So, yeah, cultural aspects there. We've just got time for one more question, and I'll ask each of you, what one piece of advice would you offer a company newly embarked on automation of its screening processes? Let's start with you, Oliver.
I think really you need to run sanctions processes like it was a business case that you're presenting. I think there is it is not more. It's not only about the fines and the reputation. Of course, this is something that you can factor in. But if you run this and you're newly embarked on that and you try to comply with the multiple regulations, you need to source that data. Then again, I mean, do a couple of scenarios. Do you want to source that data on your own? Do you want an in-house, or do you want to source the data via data vendor? Do you want to rely on internal IT on these matching processes, or do you want to use a standard software service or a standard software module? If you're a compliance professional, then I think this is a business aspect that you need to think about. And we think, of course, as a data vendor, we have the economies of scale, right? We source the data, we sell it to multiple clients, so probably sourcing that data on your own will be an endeavor that will be almost impossible. The same thing is the screening systems are so advanced now, so probably your internal IT will never be so advanced with the algorithms. So these are all points that you need to consider. And but again, what is important is to have the management buy-in in all these decisions, and that the escalation processes are defined, and in case you have then a hit, that it's clear what needs to happen.
Okay, thank you, Oliver. Gail, what would be the one piece of advice you would offer?
Thank you, Mark. I would say to start right by starting small. Try to gain a clear understanding of your risk profile, your data landscape, and then layer in the automation. Make sure that you map, end-to-end processes, and incorporating the human review as a central and key component from the very beginning. I think that would really be my advice.
Great stuff. And finally, Harsh, what would be your advice?
It's difficult to go last because the best advice has already been given out, but I will say make sure you have strong foundation and both a short-term and a long-term strategy. Your foundation could be focused on improving your data circumstances, building out for ISO 2022 if you're doing payments space, and make sure you have realizable goals for the AI plan.
Excellent. Thank you very much, Harsh, and thank you, everyone. This has been a fascinating webinar, and we do also have a white paper written to accompany the theme of the webinar, and you can find that on our Data Management Insight website. So it remains for me to thank our sponsor, SIX, for this event. And I need to remind you as well that we have our 3 events upcoming. We have our RegTech Summit New York on the 20th of November. There's also a webinar on the just before that on the 12th of November, which is Gen AI and LLM case studies for surveillance, screening and scanning. And then looking forward next year on March 26th, we have our Data Management Summit in London. Again, thank you to our sponsor SIX. Thank you to Gail, Oliver and Harsh. And thank you for tuning in. May I also remind you, the audience, to take our survey that will come up on your screen after this. Thank you. Bye-bye.